Well, with continuing geopolitical tensions, we'll take a look at how global markets are responding. It's been extremely volatile over the last week or so, and US markets declined in trade on Wednesday. Well, the escalating geopolitical tensions are not helping at all. In fact, the Dow was down for a fifth straight session, the S&P 500 down for a fourth straight session. The Dow was down 1.4% in trade yesterday. The S&P 500 is down nearly 1.9% in trade on Wednesday. The Nasdaq was completely beaten, down over 2.5% in trade on Wednesday. Tech stocks really taking a beating for this. In fact, when we look at all these three indices versus their highs, well, the Dow is now over 10% from its all-time high, of course, which was clocked in January. The S&P 500 is down 12% and the Nasdaq is down almost 20%, a clear correction showing in all three of the indices. Even when we look at the stock futures, despite this decline, stock futures are further lower. So the Dow futures is down 0.6%, the S&P 500 down 0.7%, and the Nasdaq futures are down 0.9%. Mind you, after being beaten 2.5%, they are down a further 0.5 to 0.9%. So strong cues coming out, strong negative cues coming out. Moving quickly on to how Europe was looking yesterday. Well, European markets closed mixed yesterday. Well, the DAX was down around 0.5%. The FTSE held down to only 6 basis points of gains, probably the only major index which could hold on to any sort of gains at all. The CAC 40 was down around 0.1% and the Stock 600 was down around 0.25% in trade yesterday. Moving quickly on to how Asia has opened today, that's the more relevant part of it. Well, the handover has been negative clearly, and that has translated to Asia opening negative as well. So the Nikkei, there's red all across. The Nikkei is down around 0.7%. Mind you, Nikkei had a holiday yesterday, so they weren't trading. But the Hang Seng is down 1.5% after being beaten yesterday. The ASX 200 also down almost 2.5%, and the Kospi is down 1.5% as well. So clearly Asia looks negative. The SGX Nifty futures are also 1.5% down, broadly well below that 17,000 mark. So that is showing negative cues as well. Clearly looks like a negative open for Indian markets at the moment. Moving quickly on to how commodities are looking. Well, oil prices continue to rise on the back of this conflict. Well, oil is now at $93.28 a barrel as we speak. Of course, Ukraine has declared a state of emergency, and that's not helping oil prices. They are continuously rising. Gold also looks slightly better, of course, the safe haven. So gold is around at $1,914 an ounce, still not at that $1,920 where it was a week or so ago. Moving quickly on to currency. Well, the dollar index continues to rise. It's at 96.35 now. It's breached that 96 and comfortably above that 96 mark. The US 10-year treasury yields though are falling. Of course, there are expectations that the Fed may be discouraged from increasing rates in their March FOMC meeting, and that will of course mean that there will be a delay in that interest rate increase, which will mean that interest rates will remain lower, and hence there is a fall in the US 10-year treasury yields, which is currently at 1.96% or thereabouts. When we look at how the Fed may increase rates or whether they will or not is of course going to largely also depend on geopolitical risks going forward. Moving lastly on to crypto. Well, crypto is also on a falling trend line. It's down around 2.5% in early trade today. It's just below that $37,000 mark. So clearly negative cues overall, and that's how global markets as well as commodities and crypto are looking in early trade today.